Okay. So, do you know anything about seed funding or venture capital? Okay. Then you're gonna learn everything. We'll take one example. Okay. You have decided, let's say you have decided to start your own business, right? You don't like that you're doing, that's the 10 to 6 job. You don't like this life. That's what you have decided to start your own business, and now you have a unique business idea. Let's say blockchain technology that the you have an idea from the blockchain tech. Okay. Uh, so any idea that you have at the moment? I'll, anyways, I'll get to you. Let's say cross-border payment solution that you have. Cross-border payment solution. Solutions for individuals and solutions for businesses. So you have this idea. This is just idea. Okay. This is just idea. You have this idea. Now you have decided, yeah, I want to scale this idea. I want to develop this idea. Right? Because I know how this idea can help people to resolve their problems, how people can send the payment from one country to another, one geography or one location to another quickly, right? How people can save their cost, how people can save their time. So it means this idea can bring the revolution in payment industry. Correct? You have this blockchain idea and this is gonna be, but you don't have a funding. See, if you have an idea, that is, I mean, again, it's again important part of entire this business life cycle. But if you don't have a fund, then you cannot scale that idea. So it means you needed someone who can offer funding to you for your business. Correct? Okay. In a first instance, what we do or what you can do, you can approach to your family members, you can approach to your closer ones, nearer ones, right, to provide funding to your business. Maybe to your mom, dad, sister, relatives, uncle, auntie, right? Paternal uncle, maternal uncle. And if they deny, we are not interested in your business or to offer funding to you. Because see, when we say relatives, they will have a limitations. If they are from middle class family, they cannot provide funding to you. Then how you can go ahead with this funding procedure? For us, from an investment banking point of view, from a banking and operations point of view, from a fund businesses point of view, funding provider is important for us. So we should know how this funding initiates or how you can elevate your idea to the first investor of your business. What I mentioned, first investor. So that first investor we call angel investor. All right, angel investor. I had a presentation in Excel or already written a format. Anyways, we'll form this new one that seed funding. Okay. You have a blockchain idea generation, or idea would be your first stage that we can call. And idea is name of idea is cross border payment solution, because now you know that it's a huge legacy to accept the payment or to to transfer the payment. So it's take up to 28% charges to transfer money from one country to another country. Means the current solution is not a cost effective, right? And even it takes time to call to the bankers, then bankers will initiate the wire payment transactions, right? They will send the link to us, we'll send the link to the counterparts, and counterpart will make the payment, then we'll again ask or approach bankers to accept the payments. So this is how means this entire process will work at the moment. But you have a solution which directly you just need to convert, open your app, means log into your app, add the payment in whatever currency that you want to add the payment, convert that payment into you know that the different currency or whatever currency that you're looking for, and send that payment directly to that particular person or counterparts on their blockchain ID, encrypted keys that we used word like blocks. So he can accept it, right? Then he'll receive payment, then he can withdraw it within a second, right? Then see, at this stage also you are looking for a funding, and now you have an investor. That first investor we called angel investor. Angel investor. Okay. Now angel investor, see, who can be the angel investor for your business? Not even, see, if anyone is interested, they can. So that's absolutely fine. That those could be anyone. I have an idea. I'll show you that as well. Dental Dost. Okay, so Dental Dost is a startup, Pune-based startup. They have recently started, and they have started to raise the funding as well, right? So they are from PCMC. You can see Vidhi Bhanushali is the co-founder, and Rajat Kabade is the founder, and Amit Dhakne, advisor and early investor. Early investor, it means angel investor, right? So they are the co-founders. They have an idea, and what they did, they reached out to the investor or person who can help them to scale their idea or to run their business, I would say, right? The guy Amit Dhakne, he invested in the early stage, right? In a startups, and now the startup, you can see their team size and all. They are very, this is a team structure. There are only 15 people, including engineers and all. See this. Now they have formed a team, and they are right. And this is the exit plan. If you invest now, even you can also invest. So minimum investment cap is you should have a 20,000, so you can invest. So once this, right, once this company get listed, then you're gonna get your money back. Simple, right? Once they list their company on a stock exchange, then we'll receive your money back with the valuations, with the current valuations. Simple. But yeah, first investor. For everyone's, there are so many rounds. So just wait. I just wanted to show you how the ideas work, how the angel investors enter and all, right? If you have an idea, then you can reach out to me. You can discuss about your idea with me. Let's say I'm ready to invest in your business. Right? I'm ready. Because I thought it's a revolutionary idea that you have. Because now we are facing lots of issues to transfer payment from one country to another, and if we can work on this idea, definitely this is gonna be help a lot. So I have invested 1 crore in your idea once year. I have invested once year, right? Now you have worked, develop a platform, develop a exchange, hire people, or build a team, I would say. Right. See, once you do this, your business start to have a value in place, right? So automatically, when you hire developers, they develop something. So it means that will add into the value. When you develop any other technique or tools or platform, so that gives us, value addition to the business. So it means not in terms of services but in terms of value wealth. So automatically every task will try to generate or develop some value for the business. If you build a team, if you bring the expert at one place, yes, so that expert also will have a value. So it means, let's say this process took 1 year, right? And now you have reached here. At the end of the 1 year, again you're looking for funding. You're seeking for a funding, but here at this point of time you have worked something, right? So you are not a no more like a beginner. Means you have already crossed the first stage of the business. That is, you had an idea, you worked on it, and now that idea in a startup stage. Which stage? Startup stage. In this stage, that you can call even seed funding also. Why seed funding? Your idea is a seed. Here you may expect rounds as well. At very initial, there would be, or else we'll put here. Let's say after 1 year, now you have idea and you have started to work. And this stage, if you can take as a seed funding, here you can approach to the VCs, venture capitals. You have worked on it, right? And here you can call the startup stage. If you're looking for a funding here, then you can invite venture capitals or else venture capital funds. They invest into the startups companies. All right, they target to the such a curative or value addition kind of the startups from a different sectors, and they start to invest into it. Simple. Let's say, they are the venture capitals. Let's say Blackstone, ICICI VC, they are interested. See, from their side, what they do, they they do the valuations of the business. They evaluate each and everything: revenue, profit, loss, team size, experts, right? Then their idea, the competitors' valuations, their valuations, competitors' valuations parameters, their valuation parameters means they do the in detail evaluations of your idea and your startups as well, right? They schedule several meetings with you and they come up with the valuations. Yes, we are ready to provide this much funding to you, but we are looking for a 10% equity, 20% equity, 30% equity, right? So that happened. Means this is like negotiation process that happened, but that is not important for. But we should know it, right? How this process happened, because we have seen that in a even Shark Tank India, right? Show. So people were offering the equity with a value of rupees 1 crore, 2 crore, 3 crore, right? And even the judges were highlighted few things if the valuation goes very high, right? Let's say if you say 100 crore, have it, tell me your revenue, tell me your profit, tell me your customer base, last year revenue, last to last year revenue, profit, right? On the basis of that, they used to value to your business. And then all process happened. That was just the initial procedure, but later on they sit together and they actually discuss on a valuation part and they sign the agreement with each other. Right? PPM, that process that the document we called private placement agreement. What we called private placement agreement. So simple. So here the valuation process happened, and let's say the valuations of your business is here. Let's say promoter. You are the promoter. Investor invested once here, and you had your idea. So value at the moment the value was around, let's say 4 crore, 4 crore value. So it means 20% was with angel investor and 75% was with you, correct? Your ownership. Okay. And here, if you reached at a startup stage, let's say your value of a business is 100 crore. So it means 75 crore would be yours and 25 crore would be the angel investors, correct? Mine. So I'm the investor. Let's say investors are looking for a means they are looking for, yes, they are looking for a startups like you, and your startup is there and they're ready with the deals. So again, you're looking for a dilute the 20 or let's say 20 or 25% stake. Dilute it means you will have to sell that stake to the different companies or in institutions or investors. So that's how means they transfer the fund to you, right? So here, let's say you have decided to sell 20% stake with a valuation of 100 crore. Means total valuation is 100 crore. So you have a 70% stake. You are ready to sell 20%, right? And the Blackstone is ready to acquire 50%, and the rest ICC Venture is ready to acquire 10%. So it means they're gonna process to you 15 crore and 10 crore accordingly. So you can work on your business and scale, or I would say develop or expansion of your that particular idea, right? And try to acquire more business. Means do your business. Now they have processed fund to you, right? So once they process funds to you, so there also process happen, which is the sign the agreements or PPM, right? Private placement memorandum or agreement that you can call. They sign the terms with you, right? they ask for different agreements with you on a business front, ensuring that you are utilizing the funds for only the good purpose. Most of the time that happened, once we have 100 crore or 200 crore, or 15, 20 crore, means we spend money like we can spend on any other things, on a personal things as well. That also happened because most of these startups or their promoters, they spend money on their personal needs as well, and later on what happen, again they will be in trouble, and they again they look for a funding. And that's how most of the startups, they shut down the door within a 2 to 3 years of time span. Only 20% startups, they scale to the business, and rest 80% startups, they shut down their business within a 2 years of time span. That's what they sign the PPM, where they can track each and everything, right? And if you join any venture capital business, so you can work on this PPM, to store PPM, to records, right? To review the terms, to review the PPMs, to check the fundings, payment transfers, right? Once you receive payment transfer, means payment and receipt, that both the payments that you can review, do the reconciliation, do the accounting, to check the company's current wealth, right? To record that on a P&L. So those kinds of activities that you can see with the venture capital business. Venture capital business. This was your first stage, second, and you can see even third. Here you may expect round, right? Seed funding rounds. Let's say here happen 2 to 3 rounds. It means if you're looking for a funding, right? So in a first round, how much that you want to raise? In a second round, how much that you want to raise? In a third, how much you want to raise, right? So those rounds would be there. And even this 15 crore, let's say 15 or 25 crore, so they are not ready to pay in a one go. So what they will do then, they will issue the funds in rounds. In a round E, they will issue 5%, right? B 5%, C 5%, D 10%. Let's say last round is for a 10. This all terms you can see on a PPM, private placement memorandum. Now we have a private placement memorandum. Now we have a documents. We have investors, or the Blackstone and ICICI Ventures. So they are ready to invest, and even they have invested, right? From an accounting point of view, with the venture capitals, right? It's work similar like a PE fund work, private equity works, right? They invested money through the preference equity, I would say, or bonds, maybe loans, obligations, right? Or any other fund obligations. Preference equity could be loans, obligations, any kind of loan obligations. That's what it's like. Those would be the customized obligations for every investor, for every entity, that vary from one entity to another. Right? You cannot see the similar kind of things. And any other obligations. So through which you can ask for a funding. Okay. How they can means, let's say if it is a preference equity, then how they can split the preference equity into a small denomination, so that each denomination we call preference equity. Correct? See, if you have a value of 100 crore, then that depends on you to split that value into, small denomination. Let's say you're looking for 100 crore units or 100 crore shares. You can do that. That's fine. Means for a one preference shares will have a 1 rupees value. So that 1 rupees value preference shares that you can issue to the investors, right? So where they can invest. If you are issuing if you're issuing the preference equity, so where you need to pay at least up to 8% preferred return on that investment. So you cannot pay that. I know that because you're in a need of fund, and how you can pay the funds or the dividend, right? So you cannot pay that. But what you can do, what you can make a provision. So once the security get listed, you're gonna pay principal plus provisional preferred return on the investment, and that is on a compounded basis. Do you know compounded basis? Compounded, it means, let's say we have received 25 crore investment, right? 25 crore investment. The rate of return is, let's say, 8%. Principal in and dividend rate, and this is for per year, right? This rate is for per year. Let's say first year that we have completed, and we are calculating the first year's dividend would be 2 crore around, correct? Because this is a CR, means 25 crore amount. This is a rate 8%. For a first year, your amount would be the dividend amount would be 2 crore. But for a second year, let's say this is a second year, how we can calculate it? First of all, add the provisional dividend amount plus principal. See, your amount would be 70. So total amount payable would be this, on which you can again charge 8% or make a provision for 8%. So it means your provision would be on this amount. For next year, you're going to receive the dividend of 2.16. Again, this will add. For a third year, you're going to receive on this 27 plus. So this is how, means your investment is getting compounded. So they make a provision where, so you can even, means, see, their investors are investing into a risky business. When you see the risk, so it means you can expect high return on your investment as well. So the point is here, so your investments would be the returns should be compounded. Those will be added, and once the security get listed, so you will receive entire your amount with the returns, and so that amount would be the current value of that particular security, right? So this value will multiply on a year-on-year basis. If your business achieved new milestone, then your value will multiply. We have recent examples. Adani Wilma, right, recently listed on our stock exchange, correct? We had example of Paytm, Zomato. They also listed recently. You can check the case study as well. Who are the actual investors? Who are the what I would say, the venture capital funds? Who are the invested into the late stage or individual investors? What happened with their values or investments, right? Once the security listed, so they will receive their entire fund. Simple. So now here we are done with the seed funding and startup stage, right? And here also, let's say after your company is at a late stage, or I would say now you are a mature company. You have experienced. Now you have a sound balance sheet. You're now able to generate the good amount of I would say, let's say revenue as well, right? You have a customer base, client base, revenue, but still you're looking for a funding. That maybe you wanted to start your own company, maybe you wanted to start your own production factory, maybe you wanted to start your own technology or expansion in a different country and all. This also happen because it's a part of a business, and this is like a normal activity for business. Let's say again you're looking for a funding, right? Again you can approach to the to whom in this particular stage. This would be your D stage. So in this stage you can approach to whom? To the private equity funds. And here the private equity investors or funds will be entered. So here you can invite private equity investment houses where they can invest into your business, right? So the private equity, why they invest and all. This is just a comparison, but don't look for a comparison. So private equity investors, they invest into your business. See, if you see at every stage, those are just investors, but we are calling them by different names. In the early stage also means angel investor, it means again that person is an investor. So what he's doing, he's doing, they are providing capital to you, right? At latter stage, there are investors, we're calling them as a venture capital, but eventually they are also investors, they are providing funding to your business. Again, at a late stage or at a mature stage or at a development stage, there are investors who are offering investing or the capital to you, and we are calling them as a private equity funds or private equity investors, right? So it means at every stage, what is happening here? So we are getting investment. Simple. So all are offering capital or investing capital. Names are different, but what is happening? The common is we're getting funds. Business is getting funds. Simple. Stage of fundings, say startups, SIDS, early stage expansion. Here the P's enter in an expansion stage and late stage. They enter through again debt, debt capital, private equity. You can call preference equity, right? And those are the instruments where they can enter into it. Those are just names. Breached financing, Fitch financing, blah blah. But that's those are like venture capital, simple. And the first would be your anchor investors or angel investor. Why we call angel? Angel it means God, right? So when you are in a need of a capital or need of a fund, there is a someone who is helping to you, and he is like a God for you. That's what means the the name migrated from God to angel. Once when someone help to us, we call right. You're like a God, so you help me in my difficult situation. The same way, angel investor. Venture it means it's a business, the which is at a very early stage. So where the venture capitals will help, and later on private equities funds will help, and then debt, and then lastly here you can see your business will get listed IPO. Later on you can invite all the investor, discuss with them that you're going to list your security. And even before investing, because private equity holders, when they signed the agreement or PPM, they discuss about the exit route as well. Here you can see on the document itself, they mention it how they're going to exit the security. IPO. So they want to list their IPO, right? Where once the IPO listed, so you're going to receive your fund back or money back. So means everything would be there. Everything they will mention. Everything you can see on a terms, different terms. Just the point is, just sign the agreement. If you are not okay with, discuss with them, right? Negotiate with them. Eliminate that particular terms if you want, and if they agree, because it's a mutual agreement between two counterparts. Okay, but for us, the important is we should know the procedure where the common stock come into picture. Here, they just enter into means investor enter into a business with the agreement again. You can call PPM. They sign formal agreement. Here also happened the same PPM. Here you can see preference equity. The two instruments that we're expecting. One is debt instrument means bonds, and another one is preference equity. And later on, if you list through IPO, then common stock come into picture. Common stock means equity, where you can easily trade on a stock exchange platform. Now you can link, right, with the secondary market. So it means IPO they launched in primary market, right? They distribute the securities in the secondary market where the securities will be listed on a stock exchange, right, where you can easily buy and sell your securities from the stock exchange platform. And what are those? BSE, NSE, right? And at international level, London Stock Exchange, New York Stock Exchange, Nikkei, then the other Japanese Stock Exchange, right? There are so many. Russian Stock Exchange, Shanghai Stock Exchange, Mauritius Stock Exchange. There are so many. So you can link entire things to. So this MBO and buyout. So these terms are beyond, right? Uh, so we'll discuss in a private equity session. Private equity, okay, because we'll schedule dedicated one session on a private equity where we discuss all the important terms. But this session wasn't for a private equity. My intention was to discuss, be the story behind this, common equity, how we reached at a common equity place, right? See, if you don't list your security, so you should have a questions in your mind. If you don't list the security on a stock exchange, then how we can repay the debt of or repay the value of the angel investor, venture capitals, right? Private equity investors and debts. How we can repay it? Can you guess? And if you don't repay, actually they put a lots of pressure on a company to list your security or to repay the debt or repay the other value. Then you can declare your private limited company. That's what they signed the agreement, right? So in which time you can list your security or so they're gonna receive their value back. I will have two options here. If you don't want to list or don't want to go through the public route, so you need to have a profitable business at that stage. Means you are able to generate the profit. So where you can repay the entire value to the investors. And if you don't have a profit, what happened in a PTM case? The business was in loss, right? So it means eventually they were not able to pay the debt of the private equity, venture capitals, angel investors, right, and any other institutions if they had. But later on, what happened? They had to list through the IPO, and once they list, so they have repaid the capital plus whatever committed returns or value. I would say they had returned entire things to the all this private equity funds, venture capital funds, debts, angel investor, right? And how this means in a IPO, you can see who can participate in IPO. Because IPO, it means it's a conversion process. Actually, what I believe, we are converting so entire value into common stocks. So what we are doing, we are converting value. I'm saying value, preference shares or debentures or whatever that you had issued. We are converting entire, the instruments into common stock, and we are listing that on a stock exchange, and we are issuing that. And we are issuing to whom? This is also important. Who can participate in the IPO events? We'll see that. So we have one example which is recently listed stock Adani Wilmar. Adani Wilmar. This is recently listed. See who are the investors, shareholding pattern. You can see promoters still they have a 87% holding. Means only they have issued 13% something, 13% holding, right? And they have raised the capital where they can repay the debts, repay the debts of maybe other investors, let's say venture capital investor, maybe private equity investor, maybe bank or institutions, right? Maybe they're looking for expansion of the business. That's what they have sell out their the 13% holding or entire 13% stakes to the investor. And who are the investor? See this public. So almost, if you can see in a green, mutual funds they are holding 0.72%. FIIs, those comes under the hedge fund category, 2.89. Then public are holding very less, right? And no, not 0%, 8.4. And others that categorize means public and others, that comes under, you can see here as well. FIIs holding, public holding, all shareholding details. This would be holdings placed, nothing. FIIs, DIIs, public, but as per data, it's shows zero. I have entered into it, then how they can show the zero in database yet to update. I have also shares of Adani Wilmar. So it means at in a initial public offering, we all enter, we all participate, right, and we all subscribed. So in short, so once we purchased, it means company will receive value, right? And that value is that the company will return to whom? PE, VC, and the other debts or obligations what they had. Simple. So here, if you can see the process, PEs and VCs they are taking exit, right? And EMF and HF they are taking entry into it. PEs are selling, VCs are selling their stake, or promoters are selling their stake, and the other different investors they are entering into it. Okay. So this is important for us. So we'll discuss all the presentations in a what I would say in a the private equity session, right? This is for a private equity. So we'll discuss in a private equity. This wasn't for a private equity, but I just wanted to discuss the back end story, what happened in the back end of that the common equity part. And I hope now you have a better understanding about means how the business they started, they convert their value into preference shares, then the common equity, right? And once the common equity listed, how the mutual funds they enter into it. Okay, so any questions or any doubt that you have?